Now, let's look into the financials of the company. So, Conformis, a few interesting things that are going on. You can see this is the annual chart from 2016 to 2020, and you can see the revenue. Revenue is fluctuating a little bit. Back in 2016, the revenue was higher, and then it decreased a little bit. Then 2017, it came out quite a bit, so minus 2.23%. And 2018, it was up again for about 15% in 2018. And then 2019, it went down again. So this is just the revenue that I'm focusing on right now. And it's again going down to about 11% last year. So there are many factors which might be playing in this, but you can see that the revenue has been fluctuating a little bit. But what's interesting is the net income has been increasing. Now, this is in the negative section, so you can see the bar graphs below which are decreasing. And right in 2019, they had a huge increase in their net income. And that's probably when they had, if you look into the 5-year chart, in 2019, you can see that increase that going on. So they must have, something might have happened where you can see almost a growth of about 600 or 800%, 900%. A stock that was about $0.46 or 0.46 cents, and that went out to about $4.556 in a span of a year. So you can see that huge gain which happened back in 2019, and that was accompanied by the huge increase that happened in 2019 with regards to the net income. You can see the 34%. But what I'm concerned about is the revenue is not following that trend. The income is increasing, but the revenue, you don't see much of it going on. That could be because they are trying to improve their cost. So the cost of revenue, that's probably decreasing. That's how they're controlling their net income. So something interesting to look into. Now, the float on this company is about 142 million. So there is quite a bit of shares out there. Again, but like we saw, the insiders are holding only 4.3%. The short ratio is very less. It's only 4.1 million. This is interesting. This is when back in 2016, the CEO had come out on Mad Money. This is the video. I can post all the links in the description below for you to look into it. And he basically, back then, Jim Cramer was also talking positive about the company and how they felt. And it was basically a good review back in 2016. But if you look into the chart, and this is the 5-year chart, 2016, 2017, 2018, you can see the stock has been, right when it came out in the IPO, it has been decreasing. It was on a free fall going all the way till 2019. And then right in 2019, with that increase in income that we saw, that we increased. And then again, you can see that fall going out all the way down there. Now, there is something interesting. This is a research article which was referred in the book by Chris Meyer, 100 Baggers, where he reviews all the different types of 100 baggers, companies that gave out 100x results. And they analyzed different companies and tried to find out what were the underlying pattern, what are the different patterns in these companies that we can look for in order to find the next 100 baggers. So this was a research by an analyst by Tony from TSA Analysis. So he looked into a few hundred baggers on his own, and he came out on a few common patterns that he saw. One of the patterns that he mentioned was the revenue or the growth in the company or the earnings growth should be complied with the increase in PE. So the PE expansion, so this is the line that he basically summarizes, where he says, in the past 100 baggers I looked at, accelerating growth rates appeared more likely to coincide with the PE expansion. So what he basically means that if there's a company which is having a accelerating growth rate, so the growth rate is increasing every quarter, and that will give you a maximum of PE expansion. So the market will value the company more, and that PE expansion will help in getting that 100 bagger for a company. So he gave a very good example. So he hypothesized two stocks, Flat and ACC, and he said, say in the year 2000, both of them had an earnings per share of $4, say $1 in each quarter. So all the 4 quarters, they made $1 per share in the year of 2000. Now, let's say in 2001, Flat made $1.25 in each of the quarters. So 25% in quarter one, then again 25% in quarter two, and again 25% in quarter three, and same thing in quarter four. In total, if you add all the $1.25, you get about $5 per share earnings for Flat. Now, similarly, if ACC, this particular stock, if this does it in a different fashion, so instead of having 25% growth in constant in all the quarters, if it started off with 10% growth, so 10% growth in the first quarter, followed by 20% growth in the second quarter, 30% growth in the third quarter, and then 40% growth in the fourth quarter. So there is an increasing growth every quarter, which ultimately gives you the same earnings per share of $5, but the PE expansion in this case would be way high because the market will be seeing this increasing growth that's happening with the company, and it will value the company even more. And that's when you get these 100 backers. So if you come back to Conformis, can we get that pattern out of Conformis? Well, with the increasing net income, yes, you can see that the increase in income. In 2020, it had about 14% increase. And in 2019, 34%. This is again annually, not quarterly basis. In 2018, you had 19% increase. So the income has been increasing, and the growth rate has been increasing. It was more in 2019 versus 2020, so it almost reduced to half. So there is that constant, the increase in, it's not a constant increase per se, but again, the revenue is not increasing altogether. So if there's no revenue increase, then where are you go? I mean, at some point, the income will be stagnant. Yes, you can reduce the cost to a level, but ultimately you need to increase your revenue at a good rate to get that output.